Today is November 5th, and it's 9:25 a.m. Eastern Time, and the stock market's going to open in about 4 minutes. So I thought I'd do a trade recap of Micron Technology, ticker symbol MU. As of yesterday, it closed at $72.24. And looking at this chart, a bit of the disclosure. So over the past month and a half, I've been in and out of Micron, both trading options and stock shares. So looking at this weekly chart, someone would look at it and like, it's on a strong downtrend. Why would you trade it? Whatever. But anyway, based on my assessment, I think a breakout's going to occur within the next maybe few weeks, maybe 2 weeks. So this is this week's candlestick. So each candlestick represents a week's worth of trading. And looking at this candlestick, it was a positive week for Micron. So I think this may be the start. Well, actually, I think this was the start down here. And why I'm saying is because using this high of 96.96 on April 12th and using the low of this candlestick here from March 16th, and the low was 31.13, crazy. So this was a $60 move up, right? So using these two high and low points, I'm gonna add a Fibonacci retracement tool. And where price is right now, it's hitting against the golden ratio of 61.8%. So this is the Fibonacci golden ratio, or on the Fibonacci sequence. So when price pulls back, typically this level will typically hold, but of course it dipped below it, almost touching 50%. But the fact that this is now pushing strong towards the upside, I think this is a good sign that this may be reversing, and a potential retest of 82.90 maybe before the end of the year. And in addition to this retracement, what I did was I also identified a Elliott wave pattern, right? So it looks like this is the end of the E wave and going to the D. So a Elliott wave pattern consists of five pivot points. So typically what it is here's the A leg, right? So let me just make this stand out. So from this low to this high, that's the A leg. And after the A leg, there's a small pullback. So this is A to B. And in the Elliott wave pattern, the C leg is the largest leg and the most significant, which it occurred here, right? So A, B, C, D is the pullback to here, and E, the final leg of the Elliott wave, is an uptrend. And that's the reason why I'm thinking that this could be the start of that leg towards the upside. So I'm not sure if you could hear the construction. Okay, that's the market open. And so with this push, with today being the last day for the week, there's a good probability that it's going to stay green. So I wanted to take a couple of positions in Micron before the end of the week. So yesterday, I went ahead and I bought 100 shares of stock of Micron, and my entry price is $72.21. And as of the open, it's currently trading at $73.07, which is up 76 cents from yesterday's close. So the trade now is up about $80, right? So it's gonna go up and down. But if price dips below 72.21, I'm looking to add another, maybe 50 shares. But that's just, one trade that I'm involved in Micron. And that's a long-term play. So because I'm anticipating that 82.90 would be tested maybe by the end of the year, that's why I took a long-term position, and possibly looking at 97.04, right? So I'm going to ride this up for about a $30 move. And at the same time, I did take a short-term trade via options, and I became a participant of the November 19th expiration option contracts for Micron as well. So right down here, the details involves the $74 strike. So I'm anticipating that price will be at or above $74 on or before November 19th. And yesterday I picked up 3 contracts at $1.01 per contract. And since getting into these contracts, it's trading at $1.43, and it's up $125. So altogether, since entering the trades yesterday, this is now up $230. So that's the rationale. I mean, what I was looking to do was buy 200 shares outright, but I thought, let me go ahead and do half shares and then half through options, right? So I picked up, right now, each contract represents 100 shares, right? So right here, this 100. So each contract represents 100 shares. So altogether, I'm holding 400 shares of Micron, of which 300 will expire on November 19th. So if price is above $74, I may go ahead and use the proceeds, right? Because at that point, if it's a profitable trade, I'll use the proceeds towards the purchase of additional shares later on. But if it's a strong move towards the upside, let's say, price rips to $85 before November 19th, then I may close out 2 contracts and use the proceeds of those 2, and then with the 3rd contract, I'll exercise and purchase those shares at $74, right? Even though if price is trading at 85, this contract gives me the right to buy these shares, 100 shares, at 74. So that's the strategy. I mean, anything can happen prior to November 19th. So there's a siren coming. So what I'll do is I'll just pause it for now. Yeah, so there's so much time. Well, actually, there's only 14 days remaining. The caveat to this is that the 14 days also includes Saturday and Sunday. So there's actually less days remaining, like maybe 10 trading days after today. So there's a few things I need to consider going into the expiration Friday. But at this point, the trade is profiting. It's a profitable trade at this point. And again, for a long-term outlook, I'm anticipating that this is the start of the trend towards the retest of 97.04. It may potentially even go higher because according to Elliott wave theory, price will go higher than the previous high of the C leg. So yeah, so as the trade develops, what I'll do is I'll do another status check on or before expiration Friday of November 19th, and I may end the update at that point and then just let the shares just ride out. So that's the status of the trade, and until the next update, I'll see you. Today is November 16th and it's a little after 11 a.m. So this is just a status check on the trade involving Micron. And as of the time of this recording, price is trading at $76.08. And so far today, it's down about 69 cents. So this is today's candlestick right here. So we can see that for the past 2 days, price has been pulling back. So with that, if I click on a trade tab, the trade is currently up $776, of which half is approximately involving the 100 shares, and the other half is involving the 3 option contracts. And because of the down day today, the option contracts lost over $200 since this morning's start, and it's currently down to 388. Now, yesterday morning before the pullback occurred, this was up about $800. So in the past day, the past 24 hours, it's lost about $500 worth. But considering that these options are expiring in 3 days, and because of the back-to-back down days, red days, I'm considering closing out those contracts now. So this way, I'm protecting, as much gains as I can. And for the 100 shares, I'm still in it. So my entry price is still at $72.21, and the shares alone are up $3.89. So these I'm going to hold because I'm still bullish on this company. So this way, I'm anticipating that eventually price is in the E leg of this Elliott wave, and that price could run much higher. So I'm gonna keep the physical shares, but I'm just gonna close out the option contracts. So right now the price is at $2.32 per contract. So, or $232 per contract. So I'm just going to go ahead and close those out. I'm going to sell it. I'm going to max it out to 233. Now it's at 234. So overall max profit is $702. So let me just fill this order now. And it's sold 200 at 234. So the option contracts are flat, right? I don't have any positions anymore. Again, these contracts were expiring in 3 days. I thought, let me just close it now in case price keeps dropping. But the physical shares, I'm still going to ride it out. And that's it. So until the next trade, I will see you.